My name is Paul Barron. Welcome back into Tech Path. Let's get started today. Before we do, I want to thank our sponsor, and that is Coinledger. Coinledger, one of the best places to get your taxes done in minutes. And of course, it's tied into just about every wallet, every exchange, every DeFi out there. All you have to do is go to coinledger.io. Make sure you go to .io because there is another Coinledger out there that is the kind of not the real one. So coinledger.io, or click the link down in our description. That'll get you right to them so you guys can sign up and get your taxes done the right way. All right, so let me jump to this first tweet. Just in, BlackRock Fidelity now holding 134,000 Bitcoin, worth over 5.7 billion on their spot ETF. So continuing to climb. We do a full ETF tracker on this as well. Another tweet right here. This is Negarasi kind of showing you a little bit here. A clear two-horse race among the 9 spot coin Bitcoin ETFs. And these are the ones that we've kind of been pointing to mainly through the sentiment tracker that we have on all the ETFs. So if you're over on the Market Sentiment Index and you have access to that on our site, just Paul Barron Network, check that out because it does give the breakdown. Now, what's interesting, Fidelity has actually been getting a little bit higher sentiment score until the end of last week. And of course, BlackRock started pulling away. So it's kind of like what you see on screen with where BlackRock's position in terms of overall tokens. So continue to watch this because it is going to be, I think, a major player going into the halving around the next setup. Now, the other thing that's going to be going into the halving is where are digital assets going? And this is talking about more than just the Bitcoin ETF. Now we're talking about possibly the Ethereum ETF and other things. This clip is the head of digital assets for Goldman Sachs. Listen to what he had to say.
I do think over the course of the year, we'll actually see the full impact of this as more investors actually come in to invest. What you're seeing at the moment is predominantly retail investors. As people now on the wealth management side, the institutions start to go through their governance process to be actively investing, I think we'll start to see a significant amount of investment from those particular parts of the industry. So yeah, we're very positive about the impact for this year. And I think as you think about 2022, where the sentiment was kind of filled with probably a lot of negativity for the most part, actually kind of having something that is really positive, I think is very good. And I think that extends more broadly across the digital asset ecosystem.
What do you think will happen with those applications for spot Ether ETFs? I
mean, a big question, obviously, kind of naturally centers around whether it's perceived to be, a security or not. And I think that will ultimately be determinant on whether it gets approved. I mean, there are different schools of thought, but I think I personally remain positive that they will, but we'll find out, I guess, over the course of the next few months.
This was something that we talked about on our space this last Friday, which, by the way, if you're not following our Twitter accounts, make sure and follow @Paul Barron, that's me, and then @Paul Barron TV, which is our studio. Now, we did a space last Friday, and Jeff Ross, Dr. Jeff Ross, was on the space with us, and he kind of hit to this point is that there is a very interesting position right now, and he's very bullish going forward here on the markets. And part of it was, in fact, what the digital assets lead was just talking about, and that is that retail has been front-running the traditional finance crew. And that appears to be now, at least now out in the open, to where we're going to start seeing a lot more activity, obviously from the success of what we've seen already with the Bitcoin ETF. So that's a good thing. I think that's good news for a lot of you guys watching the show. And of course, you guys are already kind of in on the joke in the sense of you understand some of the technology that is ramping up very quickly, and you're catching it early and looking at longer hold periods. And I think that's what Cathie Wood's report starts to showcase here. So, traditional Wall Street's starting to get in on the joke. They're starting to understand the methods that we've been breaking down here for years and understanding where the impact is going to drive. This first slide that she had, this is on page 12, if you guys have looked at her deck before, and the impact of these technologies on the economy should prove dramatic. And of course, AI is a big area. And of course, that is going to have a large part of connectivity to the blockchain sector, along with some other things that I think will continue to push in the AI narrative. So there's going to be quite a bit there. All right, so let's go to page 48 on this report. Surge of inscriptions signal a role for Bitcoin's network beyond transaction settlement, which is kind of interesting that they've shifted away from Lightning. And if you look at the third paragraph right there down at the bottom, ordinals have sparked debate about the impact of inscriptions on transaction size, etc. Point is, they're looking at this now and they see this as a business model for Bitcoin. So quite a different spin, but still very bullish on Bitcoin as a whole. Further into the report, we'll go to page 55. This is where they break down smart contracts, which are the foundation of the internet financial system. Part of this you'll see, of course, Ethereum revenue market value, 274 billion, 90% of price performance in 23. BNB, Solana coming in at 44 billion, Avalanche at 14. Large growth on both Avalanche and Solana. I'll talk about those in a second. Tron and then Polygon proof of stake. So couple of big growth areas around this, but the point is that smart contract, they're very bullish on this next layer. I want to get into some of the stats here just to give you an example. This is the Avalanche, which is why I think we're going to continue to see a lot of revenue opportunity. And remember, she's looking at these blockchains like revenue, like business models, and they should be looked that way. I mean, Ethereum's out there, just printing cash. This is a good example if you look at the amount. This is still a subnet right now it's still a testnet as a subnet on Avalanche, which is on Pulsar. And we've talked about this quite a bit. The reason that we show this one often is the capacity of transactions. Right now, hovering in transaction count, this is as the February 4th, transactions have almost 2 million transactions on the day. So again, large transaction volume on a testnet inside subnets on Avalanche. This means a big deal going forward for Avalanche as a whole. And you can kind of see the subnet right here on Pulsar and the growth that they've had in a very short period of time, especially this expansion right here, really since around November to where we are right now, popping right there on overall gas in terms of compared metrics. So one thing to compare here is also what's happening within the Solana ecosystem, because again, this is just more kind of queuing into where smart contracts are going, and I think she's really hitting on it there in terms of future. As a reminder, if you guys are not and have not checked out the Solana Saga phone, not an advertiser of our network, but we are trying to make that leaderboard. So we're going to leave a link down below. If you have not got in on Chapter 2 on your Solana Saga phone, a lot of new benefits coming. Be aware, this is a big deal. Go check it out. We'll leave a link down in the description below. All right, continuing on here, because this gets into stablecoins and the highlight of value propositions around smart contracts. And she's hitting on everything here from Avalanche, BNB, etc., to show the comparison here over on total transfer volume in 2023. And this is showing traditional networks out there, PayPal, MasterCard, and then stablecoins, then Visa. So you can see we've moved quite a bit in the way of popularity of the use case of stablecoins. And I think this is going to go a long way this year, especially if we get some regulation going in this direction, for sure. Next up on this was some of the opportunities. And this was on page 65. So if you guys are reading the report, this was showing all the different opportunities there. CCTV advertising, they were looking at social commerce. This would be a big one, 32% annual growth rate. Sports betting, which is a huge one. This is going to be big for blockchain. We're already starting to see big moves in that area. There's a handful of projects that we've talked about here on the show around sports betting. And then AI-enabled hardware, et cetera. I think a lot of these will go into compute power, which is things like Render and others out there that people, of course, are following within the blockchain ecosystems. Social commerce is another one. This is on page 68. This is talking about merchants that can sell to anyone, anytime, anywhere. It's kind of already out there right now, but it doesn't have the functionality and the smoothness that possibly Web3 could really make happen. And I think when you look at the opportunity that's going forward here all the way up to 2030, you can see the amount of social commerce growth opportunity that we are from right here, 23 and 24. We're almost going to double going up into around 25%. I think this is actually underscored. I think we're going to see social commerce explode, especially if we see the viral nature of either Lens Protocol, Farcaster, or others out there on ETH ecosystems that start to make social decentralized, which is really going to be a big part of the future of where the blockchain is going. The other thing that's going to play into this is online experiences, much more immersive, monetizable. We're going to see this happening in gaming, which we've already seen a potential opportunity there. Now, there's some interesting things that I'll break down here in a second around where I think the market might be shifting to away from technology. And I know that sounds a little weird, but I'll explain here in a second. But the point getting is that, remember, there's been all these layoffs, okay? Almost all the tech companies have had landslide layoffs in the last 6 months, and we're probably going to see another 6 months of layoffs in the tech community. Now, what does that mean? Does it mean that we've stopped innovating, or are we starting to see kind of a level of where most of tech is today at, hey, we've done what we can, we're building, and now it's more of a maintenance model? And where are all these devs going to go? Where are all these tech workers going to go? I think they're going to be moving into blockchain. I think they're going to be going into a sector that opens up an opportunity for the population to start enjoying games that are much more casual, and I think Web3 plays into that. So a lot of factors going forward. Digital consumption is another reason. Outpacing economic growth. This kind of centers in on my point, is that consumers now spend 20% of their $34 trillion on leisure budget on digitally facilitated goods and services. That's my point. Maybe we start to see a boom in blockchain. Maybe it's driven by some of the AI productivity opportunities that really start to increase the amount of content consumption, digital services, casual gaming, all those kind of things that already show digital consumption is on an absolute tear in terms of growth. So you can kind of see the direct and the indirect platform revenues that are going to come from that. I think blockchain is going to be the one that wins here. Web3 for sure, gaming, some of the functions around social, which I think will continue to grow. Quite a bit going on there. Further is vertical software platforms now consolidating on consumer services. This is getting into things that, if you think about Block, Shopify, Toast, which is a big POS platform that primarily is used in the restaurant space. And if you look at what they've integrated, everything from payments, they're becoming much more integrated into one. One thing that hasn't been put on this list for consumer services for vertical software, this is more on the software side of things, is where they may start to see some of the financial services play into it, crossing over into the vertical software business. What I mean by that is like Coinbase being able to compete maybe with a Shopify in the future if they start to integrate banking functionality, because these are integrating payments, checking, savings, debit cards, buy now, pay later. We've already talked about that, e-commerce, loyalty, and then digital wallets. That's the big one to watch for. So Shopify, we already know about their integration into blockchain and the success that's going on there. Cathie Wood is hitting on all cylinders. I'm understanding where this innovation is going. Closed loop payment volume in U.S. could increase 24-fold. This is another one. When you look at this, U.S. digital wallet transaction volume, this is open loop versus closed loop. You start to see this movement right here. And when you think about that on U.S. payment revenues for like Block, Square, Shopify, Toast, etc., all of these are starting to grow, meaning they're moving outside the traditional finance ecosystem. So if we see, and I think we will, see more advancements that will go outside the traditional models of how payment systems are done. So this is going to be one to watch, because finance, especially on the merchant side where all retail services are done, because it's mostly done in digital, it's going to start to shift the dynamic of where this growth is going to come from. So back to that point. Merchant digital wallet revenue could double by 2030. Back to my whole point here. If net deposit yields were equal to those of large commercial banks, merchant banking revenue associated with Block, Square, Shopify, and Toast could scale 40%. It's back to my whole point. These are the kind of companies that will most likely be making these kind of connections that will eliminate a lot of the middlemen that kind of fly in this area, especially around merchant digital wallet revenue, especially if we start to see stablecoin usage, which would be USDC. What's USDC running on? ERC20, that's Ethereum. All right, so let's go to another clip here. This is the Goldman Sachs digital asset guy talking about utility. Listen in.
But then when I start to think about the broader kind of digital asset marketplace, this is actually, there's a big shift in sentiment, and I think you can visibly feel it, and I think that's good because we've seen a big kind of shift in terms of the breadth of the marketplace, the asset managers, as I talked about last time, sell side, even the FMIs really kind of start to focus. And this year I expect to see in that space, and in part the likes of the BlackRocks have played a big part in really kind of moving the market forward. But as we start to think about the digital asset marketplace, where you may be tokenizing certain types of funds, issuing digital securities, using it for collateral mobility, now it's all about, forget kind of proof of concept, it's about really showing how you can create markets with liquidity and actually start to commercialize this. And for us, as we think about some of the key kind of trends for this year, one is, crypto, and I think we've talked about that quite a bit. And I think, we're starting to see a lot more appetite, across the market there. But I think in terms of digital assets, we're really starting to see, I think, evolution in terms of the offerings in a very positive way, which I think really helps the broader use case of the underlying technology.
So if you're watching our channel, you probably already get this. You've been following us for months, years, who knows. And you understand that we've been talking about, the functionality of utility use case in digital assets and what that might mean for the future of finance and other businesses. And I think finally, Wall Street is starting to get it. Now that worries me a little bit because I'm always concerned about when Wall Street starts to really invade a sector. But this may be a little different because the playing field is somewhat level here, meaning you as a front-run retailer are actually doing that to Wall Street today. But I think that the level of learning curve that is in front of them is still years away for them truly getting the picture, unless, of course, they're watching our show. Then they're getting a learning curve advancement and getting an MBA on how this stuff actually is going to affect society. So a lot ties into this. Now, what really we have ahead of us right now is an election year. The election year tie-in is critical. And the critical point is, do we continue, and this, I'll talk a little bit about this, but do we continue to go down the path we've been on, which is where we're dealing with not great lawmakers and not great legislators and regulators because they don't really understand understand how to work with the blockchain industry as a whole. So I think this may play into what Scaramucci is talking about. He's urging crypto fans, and this is Scaramucci, to support Biden. And despite the crackdown, now listen to what he had to say. He said that while Trump administration will be better for crypto regulation in short term, in the long term, he's going to create havoc and unpredictability in the legal system, possibly in the ecosystem. I would rather have a regulatory fight with Elizabeth Warren, who knows nothing about this. Clearly, we know her agenda, and people like Gensler, who also I'm still trying to figure out if he's a good guy or a bad guy. I think mostly he's presented himself as a bad guy, but I think he understands a lot more than he's letting on here. And then you look at the Coinbase case, which is a very big and instrumental case. Most likely, though, that I think will get, resolved prior to the next president coming in. But if you look at that and then the Supreme Court structure, all of that, most of those have been Trump, legal placements. And I think this all ties into maybe the future of where the regulation side of this, but more importantly, who we're going to be dealing with on the front side. I'm not sure his thesis is right, but at least he's trying to present an alternative case to look at. So you do have to consider both sides when trying to figure out what to do next year and this year for that matter. Other things that they're kind of hitting on right here are institutions accumulating Chainlink. This is something we've talked about here in the past couple of days to watch out because Chainlink has definitely got some strategic moves in place. Past 3 hours, A-Fresh wallets likely institutions have joined Chainlink and they're starting to acquire. So they're accumulating. Likelihood is that they're starting to understand the connectivity of Chainlink and its power. Remember some of the smaller options to Chainlink, like Pith, which we've talked about here before on the show quite a bit, are also something to keep a very close eye on because remember, we got a lot of those tokens coming over from the Solana ecosystem. They're going to find their way onto Coinbase. And once they do that, things start to change in the market real quick. Other things that we're hitting out here, this of course is 60 Minutes. The U.S. federal government is on an unsustainable fiscal path. Wow, breaking news there. And that means that the debt is growing faster than the economy. We're borrowing future generations, says Chair. I don't know, guys. I don't think there's a way out of this. It's going to continue to see destabilization of the dollar. I think there is only one alternative, and that's going to be digital assets. Whether you're a Bitcoin lover, an Ethereum lover, a Solana lover, digital assets are going to be the future of that and the next internet. So imagine an Amazon coin could have been done, 20 years ago with a destabilized dollar to the level that we have today. Amazon could be the coin of choice, if you think about that. So what is it that's happening in blockchain that could be in that same frame? As I said, there's a lot to keep tones on. So what we're trying to do is give you guys some more opportunities to catch us out there. So here's what we're doing. We're putting together spaces each Friday. And we're still working with the times. We did a 9 o'clock last week. We'll probably stay within that or maybe a little bit later. But where we'll drop it is over on my Twitter feed, which you can find at Paul Barron, and also on Paul Barron TV, which is where we'll pin that. You guys can join our space there. We'll have a few speakers again. Last week was pretty popular. I think this week will be as well. So make sure and check us out there. If you're not in our Diamond Circle, get in now. It's free, and it's a great place to catch additional content. We'll catch you next time right here on TechPath.